Welcome back to the channel, guys. Today I actually want to talk to you about why I love dividend investing. Recently I had a call with one of my subscribers, which, by the way, if you didn't know, you can click on the link in the description below and book a call with me, and I'm happy to talk to you about all things investing, career, money related, any guidance, whatever I can help you with, happy to do it. And I actually really enjoy those calls, having more and more recently. So in case you want to give it a go, have any questions, use the link in the description below and book your call. So anyways, after we finished the call, in the end we just spoke a little bit about his investing style, and he told me about his portfolio, and I noticed he hardly had any dividend stocks in there. And he told me he actually doesn't see the point of dividend investing, and he doesn't see the benefits. So for me, being very passionate about dividend stocks, I realized I haven't really done a whole video covering what I love about dividend investing. So here are my 9 points what I love about dividend investing. So the first one and most obvious one is passive income. Most stocks pay dividends on a quarterly or annual basis, but I also own a few stocks that pay me monthly, and that's really amazing to see, to get that income every single month paid to you directly. And the great thing by having this passive income, I can really forecast my income in the future, and that's something we call PADI, projected annual dividend income. And you can basically calculate it as soon as you have your stock holdings, you know the dividends they are paying, you can project your income for the whole year, even for the upcoming years. And that's actually without the dividend increases, because most stocks increase the dividends over time, and I'll come to this in a second. But knowing that you're going to get that income in the future, you can definitely better project your earning potential, and I much prefer that than having to rely on a pension plan from the government, which may or may not happen. And that brings me to the second point, and that is talking about retirement. Now I understand most of you probably far away from their retirement age, but one day you're gonna get there, and it's never too early to start thinking about it, right? A lot of people might retire with 60, 70, 80, whatever the age will be. But the issue is a lot of people investing in non-dividend paying stocks, let's say Tesla, Google, Amazon, and they're hoping for the prices to appreciate, so when they retire they have a high value, they can sell it at the peak and then obviously live from the proceeds. Now that all sounds very nice, but the reality is markets are cyclical. At the time when you're about to retire, we might actually hit a bear market territory where the market plummets, and it might be down for 3, 4, 5 years. So that means you'll be selling at the bottom, or you would be inclined not to sell and just to work longer to sell afterwards when the markets recover. With dividends, on the other hand, you have a projected dividend income regardless. You will know exactly what it is, unless everybody is cutting the dividends at the same time, which probably is not going to happen. There's companies out there that have been paying dividends through all different crises for 25, 50 years, 60 years. So it's highly unlikely that all of them will stop paying a dividend. And if they did, I think we would have other problems to worry about. So I really see those as a volatility hedge, and I don't need to time the market when I retire, when I want to cash out, because I believe in dollar cost averaging, investing every single month into my dividend stocks, grow them over time, and then live off that passive income that's paid to me in the form of dividend. And then rather later down the line, instead of having to sell my shares, I can actually inherit it to my family rather than selling it down to zero just to live off it. The next point is related to that, and that's about market timing. Depending on what news you're reading, some analysts are saying the market might be flat from here for the next 10 years. So we might be really going in that sideways direction for the next decade or so. And if that was to happen, all those people investing into growth companies would basically remain flat. There might be days where it goes up, other days where it goes down, but basically it moves mostly sideways, like we've seen with crypto for quite a while now. So if you invest in a growth stock or even the S&P 500, I mean, your returns basically will remain flat. Whilst if you invest into dividend paying stock, you would still get that dividend paid to you, and you can reinvest that dividend and buy more shares. So that way you're actually growing your position into that company, and therefore also your returns, because your dividend reinvested basically is a free share, right? Or of course you could live off that dividend if you already reached the retirement stage, so the choice is yours. But a sideward movement can still be beneficial for you, because you're still getting a return in the shape of dividends paid to you. And that brings me to my next point, and that relates to the price of a share. Now mostly when we invest, we always look at the price. We want to buy low, sell high, right? That's the basic principle of investing. But as I mentioned before, prices do fluctuate. They can go up, they can go down. But once again, the beauty of dividend stocks is the price actually really doesn't matter that much. In fact, if the price of the share goes down, your dividend yield technically goes up, unless the company cuts the dividends. Basically, the dividend payout, the actual amount you get as a percentage of the price of the share, actually will increase. So your yield technically will increase with that. So while the stock price might be dropping as the markets go down, your dividend income will stay the same, if not increase, if the company decides to increase their dividends, which a lot of the companies that have been increasing the dividends for quite a while end up doing in order to remain a dividend aristocrat or a dividend king, which have been increasing the dividends for over 50 years. So that's really good, that even in the downturn market, you're still going to be making your money, or even making more money than you did earlier. Next up, let's talk about drip. And I'm not talking about the dripping of my shower, but instead drip that talks about dividend reinvesting basically. And that's where you automate the process of reinvesting your dividend as soon as they are paid to you. Most brokers give you that function to basically, as soon as you get your dividend paid out by your company, you can automatically reinvest and buy more shares with those dividends. Obviously in the beginning, when you're just starting off, you're only going to get very little dividends, so it might just be enough to buy fractional shares. But later on, as your dividends grow and you make additional investments into the company, you will actually be buying more and more full shares of the company. And that feels amazing, that you basically get more shares without having to actually invest your hard-earned money. And that's really where the compounding and snowball growth effect kicks in with dividend investing. And that leads me to my next point, and that is dividend growth over time. Most people, when they start getting into dividend investing, they only look at the dividend yield, right? That's the first number that you see on most stock websites and apps. They show you a particular company pays 2%, 3%. You know, some companies pay up to 10%, even more. Personally though, I stay away from anything really over 5%, because most likely there's a reason why a company would pay such a premium to essentially entice investors to buy the stock, as otherwise they might not be buying the stock. So that's usually something to be worried about if it's too high. So for me, anything from 2.5% to 5% is something I get excited about. But more importantly is the dividend growth over time, because just getting a dividend of 3% is not really exciting in times we're in where inflation is 4, 5, 6, 7% in some countries. So it's very important when you invest in dividends, you want to invest in companies that grow their dividends over time and don't just keep it flat. So myself, I actually like to invest in companies that have a compound annual growth rate, basically an average growth over time, over the last 5 years, of more than 5% at least. So meaning every single year, they're going to be increasing the dividend by at least 5%, if not more. Meaning if you reach a stage, for example, where your annual dividend income would be 10,000 euros, the following year, without having to invest any additional money from your side, you would be getting an additional 500 euros just from the growth of the dividends from those companies. And then obviously the following year, 5% on the higher amount. So there the compounding process really starts kicking off. So you really want to make sure to invest in companies that have a growing dividend. That's also a sign that the company is healthy and continuing to grow their operations, their revenues, their profits. Otherwise, they wouldn't be in a position to grow the dividends over time. So that's a very important thing to look at. And in line with that, my next point is that if they are in a position to increase their dividends over time consistently, like dividend aristocrats, for example, which have been increasing their dividends for the past 25 years at least, or even better, dividend kings, which have been increasing their dividends for the last 50 years, that should also give you confidence that the company knows what they are doing. There is a proven track record. I remember when Coinbase just launched, went IPO, everybody was trying to buy their shares. Unfortunately, I didn't get my hands on it at the time to buy the IPO price. Now in hindsight, I'm really happy I didn't, because obviously we all know what happened to their share price. So if you buy into a hyped up company without any track record that has huge growth promise, it might happen and turn out to be the next Apple. But on the other hand, it might also be the next Coinbase, DocuSign, or many other of the companies we've seen failing over time. Dividend aristocrats and dividend kings have weathered the storm and different crises over time, and honestly, I would trust my money with them and sleep peaceful at night. The next point why I love dividend stock investing is that they're a great hedge in a bear market. As I said before, even in bear markets when the price is going down, dividend will still pay you dividend income. At the same time, traditionally, a lot of people are fleeing more risky investments and saving themselves into more solid companies, consumer staples, utility companies, predictable business models that people know that even if there's a crisis, people are still gonna buy their goods or services. And that's what I like about dividend stocks. So even if the market goes down, most likely those dividend paying solid companies are gonna be dropping much less than many of those tech stock high growth companies. And for me, that makes it really attractive to have a nice balance in my portfolio, to have on the one hand side dividend growth stocks that keep me safe in those difficult times. On the other hand, I still have a bit more bullish portfolio, let's say, especially my cryptos. So if the market picks up, we are in a bull market, most likely my crypto will recover and start booming and probably outperform my dividend stocks in those times. So that way I can benefit in both market scenarios, if it goes up and if it goes down. And that's definitely a very strong case to have at least some dividends in your portfolio. And the last point is that it gives you emotional peace, which honestly means a lot, especially going back not so long ago when I looked at my crypto portfolio, I woke up and I was literally down 50%. I mean, you talk about a multiple 5-figure amount that I was losing technically, at least on paper. I haven't sold it, but still that really messes with your head and you wake up, you're quite negative about it. And in fact, it has been going on for quite a number of years now. It hasn't really recovered a little bit, but still, if I was only invested into crypto, I should be pretty depressed by now. So having added more money in dividend stocks while my total portfolio is still down, yet at the same time, I'm getting those monthly, quarterly, annual dividends coming into me. At the moment, it's just around 400 euros, but I can see every single month, the more I invest, this number is going up. So despite the share price going down, I'm actually in a position to buy more shares in that company and grow my portfolio and my dividend income every single month, and I see that number going up. My next goal would be to hit 1,000 euros in annual dividend income, would be a really nice target. But obviously dividend investing is not a get rich quick theme, but rather a long-term investing mindset that gives me peace of mind. I can sleep peacefully. I don't have to follow the news every single day. What's happening, the latest news, mergers, acquisitions, which, as we know, one bad PR article might tank an entire company. Whereas if you invest into dividend companies like Coca-Cola, I mean, they're not going to disappear overnight. On the contrary, they're here to stay, only going to continue to grow, and in the process pay you that sweet dividend income. I hope by now you're as fired up as I am about dividends. I know it's probably not the most attractive investment method, nor a topic that will get all the clicks on YouTube, but it's something very dear to my heart. I really enjoy dividends, and if you don't believe me, at least believe one of the richest men in the world, Mr. Warren Buffett, who absolutely loves dividends, and he is actually getting 770 million in dividends from Coca-Cola from an investment he made a couple of years ago worth 1.4 billion. So today he gets almost 50% dividend yield on his investment he did a while ago. That's the power of dividend growth investing. Ladies and gentlemen, I hope you enjoyed the video. If you did, please give it a like, subscribe to the channel. It means the world to me. As always, stay healthy, get wealthy, and I see you in the next one. Ciao.